Hey everyone, welcome back to Corporate Decoder, the place where we peel back the veil on corporate filings to reveal the juicy truth behind the numbers. We will be diving into Brookfield Asset Management's latest exciting report. And let's just say there is a new tune being played. Before we start, if you appreciate getting straight insights from corporate, do Humans, make sure you are subscribed. We also have a Discord community linked in the description below where you can join the conversation and get exclusive content. Alright, let's get into it. We are looking at a filing from Brookfield Asset Management Limited, or BAM as they are known. The most interesting part here isn't a deep dive into their quarterly earnings, but rather a specific announcement made on the 13th of November, 2025 regarding a new offering of notes. Think of it like the company saying, hey, we need some more cash to fund our plans, and we're going to borrow it from investors. Now, why are we paying attention to this? Well, sometimes these filings tell us a lot about a company's strategy and its financial health. Even though it is not a full financial report, it gives us clues. For example, we can see that their Class A limited voting shares are traded on the New York Stock Exchange under the symbol BAM. This tells us they are a publicly traded company we can keep an eye on. The main event here is all about debt. Brookfield Asset Management announced they are issuing $600 million worth of notes maturing in 2030 with a 4.653% interest rate, and another $400 million worth of notes maturing in 2036 paying a higher interest rate of 5.298%. Together, these are called the notes. To make this happen, they entered into an underwriting agreement with some big players, Citigroup Global Markets Incorporated and Wells Fargo Securities Incorporated, acting as representatives for the underwriters. These agreements are pretty standard. They lay out all the terms and conditions for selling these notes to investors and usually include promises from the company to investors and vice versa about the accuracy of information and what happens if things go wrong. It is like the blueprint for borrowing money. This debt offering was all done legally through a registration statement filed with the Securities and Exchange Commission, or SEC. This means the company is telling investors all the important stuff about what they are borrowing money for and the risks involved. They filed this way back on the 5th of August, 2025, and then updated it with specific details on the 13th of November, the day of the offering. Think of the base shelf prospectus as a pre-approved menu of offerings the company might make over time, and the final prospectus supplement is the specific order for this particular debt offering. It is how they make sure everything is transparent and above board for investors. The filing also lists the actual documents supporting this agreement. Key among them is the underwriting agreement itself. We also see consents from legal advisors Torres LLP and Goodman's LLP. These are basically their official seals of approval confirming all the legal aspects of the deal are in order. Now, normally this section would be packed with detailed financial statements, but here it's more of a list of important documents related to the specific event we just discussed. The key exhibits are the underwriting agreement along with those legal consents. And crucially for us tech-savvy viewers, the cover page interactive data file is embedded. This is what allows us to process this information easily and bring it to you. Looking at the signatures, we see this report was officially signed on the 14th of November, 2025, representing the company. Kathy Sarpash, as Managing Director, Legal and Regulatory and Corporate Secretary, has signed off on this. This confirms the company is formally acknowledging this debt issuance. So what does this all mean for Brookfield Asset Management Limited BAM? Essentially, they are raising a significant amount of money, around $1 billion in total, through debt. This tells us they likely have growth plans, investment opportunities, or perhaps they are refinancing existing debt. Issuing notes means they promise to pay back the principal amount along with interest over time. The interest rates themselves, 4.653% and 5.298%, offer a glimpse into what the market perceives as the risk associated with lending to BAM at these different timeframes. The longer-term notes, the 2036 ones, have a higher interest rate, which is typical because there is more uncertainty over a longer period. From a Warren Buffett perspective, we want to understand why they are raising capital. Are they investing in businesses that reliably generate strong cash flows that can easily cover this new debt? Are these new investments going to increase their overall earning power? They are a large asset manager, so this borrowing may be linked to funding acquisitions or expanding their portfolio of managed assets. We want to see if this debt is being used to fuel productive assets or if it is simply to maintain their operations or pay off older debts. Without the full financial statements from a 10Q or 10K, we can't say for sure if their cash flow is robust enough to handle this new layer of debt comfortably, but the fact that they are able to secure this financing successfully indicates a certain level of confidence from the financial markets in their business model and future prospects. Companies with consistent revenue streams and strong profitability can generally absorb new debt more easily. We need to see if BAM is demonstrating that. A notable risk here is if the company's investments and operations don't perform as expected, it could struggle to make these interest payments or repay the principal. This could lead to financial distress. However, the relatively moderate interest rates suggest the market doesn't see this as an extremely high risk at this moment. An opportunity for BAM is that successfully deploying this capital into high-yielding projects could significantly boost their profitability and shareholder value. In conclusion, this filing primarily signals Brookfield Asset Management Limited's proactive capital raising strategy. They are securing funds for likely expansion or strategic initiatives. While this isn't a full financial picture, it shows a company actively managing its capital structure to pursue opportunities. We will need to watch their future filings to see how effectively they deploy this borrowed money and how it impacts their overall financial health. Alright, that is our breakdown of BAMs. Latest filing, what is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.